Following the Fed's 50 basis point interest rate cut yesterday, Tesla stock is up 7% today. Now, some of this has to do with the Fed cutting rates, but we do have some pretty big Tesla stock news as well today. And we will get into all of this in this video. So first off, let's start with some of your Tesla stock breaking news today. First and foremost, Tesla announced last week that they delivered 15,600 Teslas in China. This is almost double what Tesla delivered in the same week of 2023, only coming in at about 8,500. So the strength continues over in China. And the idea is, especially after this 50 basis point rate cut today, that perhaps the strength will pick up in the US and maybe even other parts of the world. And this was actually the second best week of this quarter, just slightly behind last week, and it was the fourth best week of this entire year so far. We also have this new note out from UBS today. That's titled Tesla's Robotaxi Event Draws Tech Investor Interest and Auto Industry Skepticism. It says Tesla's Robotaxi event on October 10th is attracting interest from tech investors and skepticism from the auto industry, UBS Securities said in a note on Thursday. Quote, since the event will have a lot of tech eyes on it, there is an opportunity for Tesla to not only convince that investor base that the current valuation is justified, but that there is significant upside opportunity from here. UBS added that it expects the stock to show strength leading up to the event, but it's uncertain if Tesla will meet expectations and maintain momentum afterward. Tesla is hosting its event at Warner Brothers Studio to showcase a futuristic robotaxi environment, UBS said. Tesla can't show their service in the real world because they do not participate in the California Public Utilities Commission AV passenger service pilot program. They don't have an autonomous vehicle tester program, manufacturer's testing permit from the California Department of Motor Vehicles for driverless testing or deployment. The event will highlight key areas, including updates on its full self-driving technology, plans for a vehicle sharing network, economic projections for its robotaxi service, substantial AI investments, and possible new vehicle models, while also generating speculation about surprise announcements and drawing close scrutiny from investors and experts. While bulls believe Tesla's technology will eventually succeed, widespread robotaxi deployment may be delayed as the company must prove its technology, navigate local regulations, and address operational challenges, UBS said. Basically, UBS is saying we could see a rally for Tesla stock heading into October 10th, but whether or not Tesla does well following October 10th will really come down to, are expectations exceeded, or is this a disappointment? If you want my 2 cents here, I think anything is going to be a disappointment. And let me explain why. If we rally into that event, you typically sell off after these events. The one and only thing that I think will cause Tesla stock to go higher, it is definitive guidance on when the robotaxi network is launching. I don't care if there's a great presentation, if there's big numbers that are shared at that presentation. It's not going to matter much if there's still an open question of when is this thing going to start operations? When are we going to get the first robotaxi ride? If Tesla says by the end of this year, speaking in 2025, like by the end of 2025, then I think the stock will do very well. If Tesla says they expect the first robotaxi ride in 2026 or 2027, that's not going to be as good. Now, if Tesla doesn't specify at all when the first robotaxi ride could come, that is a clear sell the news event coming October 10th. But then again, it does depend what happens in the markets and with Tesla between now and October 10th. If we just trade sideways at current levels, there's not going to be as much expectation. There's not going to be as much hype. And maybe Tesla stock can go higher following October 10th, even if we don't get a clear and definitive date for the robotaxi network to start. But if UBS is right and Tesla stock shows strength into October 10th, basically, in other words, if Tesla stock rallies into October 10th, that's where you could be set up for short-term disappointment. So it's really going to depend what happens between now and October 10th and what actually happens after October 10th for Tesla stock. Hopefully that makes some sense. If it does not, just subscribe to the channel and I'll keep you up to date and everything you need to know every single day. But by far the biggest thing that is actually affecting Tesla stock today, yes, the news we shared is great. It is the 50 basis point rate cut from the Fed. And the markets are getting a bit of a sugar high from this 50 basis point cut. But the fact of the matter is, when the Fed cuts 50 basis points, there has always been a problem historically. You can see 2001, the Fed cut 50 basis points for the first Fed meeting. We fell 56%. 2007, coincidentally, on September 18, 2007, when the Fed cut 50 basis points, markets ended up falling 53%. Now, you did get a short-term rally after this 50 basis point cut, September 18th, 2007. You can actually see this here. This up and down line that I have is on September 18th, 2007. Markets went up 3% the day the Fed cut rates 50 basis points and largely rallied into September 18th, 2007. You sold off for a couple of days after and then rallied higher. This was about a 6% rally, including the 3%, 6.5% rally, including the 3% day you've seen on September 18th. So markets went higher in 2007 upon the first Fed cut. But if you scroll out to what inevitably happened following that first cut, it was not good. Now, again, I'm not trying to say this is another 2007, 2008, 2009 recession. I don't know that. I don't know if it is. I don't know if it is not. I am just trying to point out 50 basis points is never a good thing. It never has positive implications for the economy. And you can rally, at least in the short term, on a 50 basis point rate cut. But what ends up happening over the coming months and sometimes years can be way, way, way more negative. Because let's think about a 50 basis point rate cut in terms of simple principles. When the Fed is raising rates, I think we're all familiar of what that does. The Fed is trying to slow down consumer spending. The Fed is trying to make money less accessible by making it harder or more expensive to spend on credit cards, to get student loans, to buy a home, to buy a car. When the Fed is cutting rates, they're actually trying to boost consumer spending. Okay? Why is the Fed trying to boost consumer spending with an outsized rate cut if the economy is, quote unquote, fine, like Jerome Powell says? The simple answer is the economy is not fine. Anytime the Fed has ever started with a 50 basis point rate cut, the economy has never been fine. And I don't think this time's any different. Now, it's actually funny that some people believe the Fed is supposed to be honest with markets. The Fed has two mandates, and one of which is not honesty. First mandate is maximum employment. Second mandate is 2% inflation. Nowhere ever has the mandate been the Fed needs to be honest with markets. The Fed is actually incentivized to lie to markets like they did yesterday to help them do whatever they need to do to achieve their dual mandate. And the Fed, Jerome Powell, did just that. He lied to markets. He said everything was fine. He calmed down fears of an economy slowing down. At the same time, he gave you a jumbo rate cut. Jerome Powell is the best actor I've ever seen. The way he can get up there and just spew all those lies that the economy's fine, there's no reason to believe there's going to be a recession, all of that. So calm the markets, do that part of the job, and really try to get a head start on stimulating the economy at the same time. It's a hard thing to accomplish, and Jerome Powell nailed it. yesterday. And as I explained in the last video, it would have actually been like immoral for the Fed to be honest with you yesterday. Like, just imagine if Fed Jerome Powell went out there, gave us a 50 basis point rate cut. He said, yeah, there's a problem. The problem is the economy is slowing too fast. It's slowing more than we would like. And we could be in recessionary times over the next couple of months. Like, imagine if he would have said that. Today would have been very red. Companies would actively, like right now, be talking about, hey, who can we lay off? How can we get ready for this recessionary environment the Fed just talked about? Jerome Powell yesterday could have ignited a recession if he was honest with markets. That's why the Fed's job is not to be honest with markets. It's in fact the opposite. It's to tell you what you need to hear, sometimes what you want to hear. That's exactly what he did yesterday. But the underlying issue is the Fed's actions show you there is a problem. Because theoretically, if the economy was strong and just fine and there was no signs of a recession, like Jerome Powell said, they would just keep the federal funds rate where it is until inflation is 2% or undershooting 2%. And then very, very, very slowly work that interest rate lower. That's not what they're doing. Not at all. So I want to just put this segment in this video to, again, remind you guys that I don't give a rat's ass what happens in markets in the shorter term. Things are not good. Things are not great. Things are not fine, like Fed Jerome Powell says. And if you are under the assumption Powell is honest, don't be. Like, whoever says that has no idea what they're talking about. Like, what do we expect to hear out of Powell when we ask him if the Fed's behind the curve or if the economy is showing signs of a recession? Like, what do we expect Powell is going to say? Of course he's not going to be honest with you. So I do think in the short term, markets can rally. They can have their sugar high. We can do our thing. But probably after the election is when the data from the government is going to start getting more accurate, and it's going to show the economy is in a much worse situation than we think. So November, December, January, February of 2005, that's when we want to be on the lookout for a larger drop in markets. Now, keep in mind, I am expecting some election volatility, some election uncertainty from now until the end of October. So whether or not that comes before October 10th, whether that comes, mid-October, late October, that's really what's going to help dictate what happens to Tesla stock. Like, if the election correction, if you will, comes in early October, then Tesla stock's probably not going to rally into the October 10th robotax event. If the election correction comes after October 10th, Tesla could very well rally into the robotaxi event. With that said, today, Tesla's option activity is exceptionally bullish. You are seeing 33 different trades totaling $9.92 million with a positive order value of 97% today. So there's not much bearish activity at all in Tesla options. Tesla's short interest of free float did recently jump a lot from 2.84% to 3.3%. So it's pretty weird what happened there. We'll have to dive into that a little bit more in the next video to fully figure that out. But you do have a dollar amount that's currently sold short in Tesla of about $21 billion. And you do have 91.55 million shares that are currently out on loan. You do see today return shares of 59,500 and borrowed shares of 161,000 today. Sentiment for Tesla over on StockTwits is not what you would expect to see today, given Tesla is up so much. Sentiment is bearish at 26. Yesterday, it was neutral at 54. So people are actually more bearish today on Tesla than they were yesterday, even though Tesla stock's up $16 today, which is fascinating. Message volume was normal at 49 yesterday. Now it's high at 66. The participation ratio is also high today at 55. CNN's Fear and Greed Index today is now at 68. Yesterday it was at 56. So this is a massive jump in the CNN Fear and Greed Index, and you're actually starting to get pretty close to extreme greed territory again, which is a big flip-flop from where you were 1 week ago in fear at 44, now at 68. That's a massive jump in a very short amount of time. What's also fascinating, if you take a look at the Fed Rate Monitor tool, we'll talk about this a little bit more in the next video, but markets are pricing a 39.7% chance of a 50 basis point rate cut November 7th and a 60.3% chance of a 25 basis point rate cut. So if we get one piece of bad economic data, you're going to start pricing in another 50 basis point cut. Google Trends data continues to unfortunately show search trend activity declining for the Tesla lineup. The Cybertruck currently at 49, the Model Y at 22, the Model 3 at 21, the Model S at 9, and the Model X at 8. Hopefully this 50 basis point rate cut changes that, but we'll see. The percent of stocks currently trading above their 50-day moving average today is at 67.4%. You actually have 8% of stocks breaking above their 50-day moving average, which is really good. I mean, that's 8% of the entire market today breaking above its 50-day moving average. You can't argue with that. Tesla's global inventory numbers are falling a lot for the Model 3, which is actually a good sign, now sitting at about 4,200 vehicles in total global inventories. The Model Y has fallen a lot as well, with about 6,000 vehicles in total inventories. Model X has also fallen a lot to 3,500. The Model S down to 2,500. So you're actually seeing what looks like an inventory rundown for Tesla products. The 10 and 2-year yield curve inversion is uninverted now, 9 basis points. So again, this really does put the recession on watch. And your Treasury yields today are trading higher to 3.74%, up 5.5 basis points today, which is also very interesting because you would expect long duration treasuries, their yields to actually fall if the Fed does 50 basis points. There is some underlying concern that inflation could spark again. I'm not concerned about that because inflation is really a cause of the economy being strong. And people spending a lot of money. I don't think the economy is strong enough to support another round of inflation. And I don't think the consumer in that sense would be willing to pay higher prices. You're already seeing the consumer cutting back on discretionary items. Look at Nike, look at, Lulu, look at all of your discretionary companies. They're not doing well. But we will talk about this a little bit more in the next video, as well as the prospect at this point of a short squeeze for Tesla. Tesla stock on the charts looks absolutely incredible. With that said, let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel, and trust me, you do not want to miss the next video coming out at 8 p.m. Eastern Standard Time tonight. You guys have a great rest of your day, and I will see you in the next one.